if you are a first-time buyer with a 10% deposit, what were you going to be paying for that house prior to Trump starting this Middle East war to actually what it is present day?
It would have been 4.39.
Okay.
And you would have paid £1,125.
So
Okay.
Difference.
So £143.
Okay, that's fairly significant.
So we're talking £1,600 a year, roughly?
Yeah, so you're talking 12% of your monthly payment, essentially. There or thereabouts, the increase. So
that's pretty significant. Welcome back to the latest episode of the It's Who You Move With podcast. We are at a class and different venue today. Jade, would you like to tell us where we are?
So we've ventured over to Stourbridge. We are at Cofton At The Bridge, newly established cafe and brunch spot that everybody needs to come and try out.
Absolutely.
Incredible little tucked away.
It's a good spot.
It's a great spot. Yeah, we've been before. The food is incredible. And with that in mind, we would like to introduce our first guest today. So, Elle, do you want to come and join us?
Here he is.
This is Elle.
Here he is.
Hello, how are you?
Hello.
Good. Come and have a seat.
So just thought we'd invite you on, Elle, to get a little bit of an insight as to how it started.
How long you got?
However long it takes.
As long as you need. Tell us about your journey.
Okay, so Cofton Pizza started 4 years ago on the 22nd, which is tomorrow, I think.
Wow, okay.
So it's our 4-year anniversary.
Anniversary.
It starts
Happy anniversary.
off in the back garden with a uni pizza oven as a hobby.
Yeah.
As an accountant Monday to Friday. And weekends I fired up the oven, sold a couple of pizzas to the neighbours, and the passion started from there.
Fantastic.
Got a horse box with a wood-fired oven on it.
Yeah.
We started doing events, got into Digbeth Dining Club quite quickly.
Popular spot.
It is a popular spot, High Herbertshire.
Yeah.
Nice.
We got in there quite quickly and doing festivals and school fairs, and one thing led to another. We end up in Sutton Coldfield doing pizzas at the Bracebridge
Yeah.
Nice.
with a gorgeous terrace. That's absolutely beautiful. And then we ventured into bricks and mortar. So we bought Cofton on the Green last year, which is in Barnt Green, where our famous folded flatbreads came about.
It's taken off as well there, hasn't it?
It really has. Honestly, it's only a 35-seater, and you need to be booking a table.
Amazing.
Yeah.
And
Yeah.
Elle, am I right that was on the Food Review Club?
That was on Food Review.
Fantastic. And he raved about
He did.
it, didn't he?
I think he gave me a 9 out of 10.
That's a brilliant.
Which I'll be. I'll
yeah,
happy
I'd
with
take that. He doesn't rate anything 9 out of 10.
No, so he
fair
had
play.
the full English, which was Lashford sausage. You can't use any other sausage.
Yeah.
Lashford sausage, Danish back bacon, eggs, hash brown in a folded flatbread, which is our dough.
The flatbreads are unreal.
Yeah, well, I think that's it. You said the dough. So
dough,
I
it's
had
the
the
dough,
spicy eggs here,
Oh, man.
and I enjoyed it so much I ordered a second one. Slightly regretted the hot sauce after the second one, but it was incredible.
The spicy eggs is fantastic. It's the enduja, the
Yeah.
sriracha sauce, or the chili jam with a bit of scrambled egg. It's brilliant.
And that's
You've
what I'm
got
going to
that
have
really
later.
right. Yeah.
Yeah.
But we've got vegetarian options as well. So we've got the halloumi and chill, which is halloumi, cherry tomatoes, courgettes with a bit of yogurt mint dressing. That's beautiful.
Unreal.
We've got smoked salmon for the pescatarians.
Yeah.
Smoked salmon,
Perfect.
avocado with a homemade cream cheese drizzle.
Nice.
Brilliant.
Tongue twister, that one.
Just a bit, yeah, absolutely.
And a bog standard bacon sausage.
Yeah.
Rather than bap, it's in a folded flatbread.
That's incredible.
But yeah,
So that's a USP for you then.
it really is. No one else is doing it.
No.
There's a few people trying to imitate it by doing their lunch panuto, as you call it.
Yeah.
But brunch is what we're known for.
Yeah.
It's big.
Yeah.
You're not leaving hungry. Let's put it that
Super
way.
impressive.
I didn't get to my fine physique by having small portions. But no, we're very proud of our brunch offer. But obviously at both restaurants, we also do the Napolitana pizza.
Yeah.
So we're a coffee bar, brunch bar, pizzeria, and especially in this place in Stourbridge, we've got a DJ every Friday and Saturday night.
That's
And
cool.
this place is popping. It
Yeah.
really is. The vibes is just brilliant. It's not on the dance floor flashing lights. It's more background. It's a
Chill.
listening bar.
Yeah.
Nice.
Listening bar. So we got a famous guy in Stourbridge called DJ Soul Dicky.
Okay.
He plays vinyls, soul and funk and jazz
Brilliant.
Amazing.
on proper vinyls. It's brilliant. Honestly, it's really good fun. So
And
he's
that's
playing
every Friday
Every
and
Friday and Saturday. So we've got about 5 DJs on rotation.
Okay.
Fabulous.
But yeah,
That's
cocktails.
Do you do food as well at that
Yeah,
point?
yeah. Food up until 9 o'clock.
Brilliant.
We've got happy hour from 9 till 10 o'clock in the evening.
Yeah.
So 2 cocktails for 15 quid, which is a proper bargain.
Yeah, that's really cheap.
Can't moan at that.
New York sour. I don't know if you've ever tried New York sour.
Go on, tell us about
It's
that.
beautiful. I don't know what's in it. It's amazing.
But it's good.
It's pineapple juice, Deserrano, shaken up, and then with a red wine float. It's really nice.
That sounds lethal.
Yeah, it's nice.
And I can get 2 of those
Two
for
of those
15
for
quid.
15 quid, yes.
No,
Where
wait,
do I
it's
sign?
gonna be fine.
So Stourbridge is going well then.
Stourbridge is going very well, yeah.
That's good.
So how long have you been here?
We opened in Feb, so what, we're April now, fourth month?
Okay.
Brilliant.
So it's early days then in that
It
sense.
is, yeah. It used to be a popular spot before we moved
Okay.
in as a pop-up street food kitchen, as well as coffee shop.
Yeah.
So we had the likes of Eat Vietnam and Buddha Belly and various Hope You're Hungry street food traders in the kitchen. So the clientele knew what to expect.
Yeah.
So when we took over the shop, we knew we had to set some high standards to meet the previous one. So we came up with this same menu as the Barn Green one, which is a bit street foody, bit casual. You don't need to be dressed up. You don't
like
need to
informal dining kind of thing. Yeah.
You can come in tracky bees and still have a good time.
Yeah.
You can bring the dogs and bring the kids.
Yeah.
Whereas you don't have to get dressed up and leave the kids at home and be on your best behaviour and just come and
Just
relax.
chill. Yeah.
Our motto is when you come through the door, leave all your problems behind and just have a good time with the people you're with. That's all we want.
Yeah, I think that's cool.
Just enjoy it. That's all we do.
Amazing. And any upcoming events that you've got?
Yeah, so we're at Herbert's Yard, I believe. Yes, Herbert's Yard, 2nd week of May, so the 6th or 7th of May.
Brilliant.
We're there for 4 days with our pizza truck, slinging pizzas.
Is that bank holiday weekend?
I
It
think
might be just after.
yeah,
just
the
after.
4th is the
Bank
bank holiday.
holiday.
Yeah.
But the 4th bank holiday, we are in Bromsgrove Rugby Club
Okay.
Great.
And that
with
always
Digbeth Dining
gets
Club as well.
a good crowd, doesn't it?
Yeah,
Bromsgrove
busy,
Rugby Club. Yeah, definitely.
So, yeah.
I love that.
Come
though.
hungry.
I think it's nice that you've got the bricks and mortar and you still do the street food. It sounds like, obviously in your garden is where the passion came from, but it was a street food concept initially.
It
right?
was, yeah. I think I've never made a pizza in my life before. The wife got me the pizza oven from an uni for my birthday. I'm like, why did you buy me that for? I've never made a pizza in my life.
And here you are.
I wanted socks.
Yeah. As soon as I made that first dough by hand, the popping sound of the air bubbles is getting quite geeky
No, I
when it
love
comes to
that.
pizzas. But the
Passion.
popping sounds of the air, the smell of the yeast, the fermenting, it's just brilliant. Yeah, it's really
Awesome.
nice. And then the taste, obviously.
Yeah.
What a genuine story.
I love that. Yeah, absolutely. Well, thank you ever so much for
My pleasure.
coming
Thank
on
you
and
very much for
sharing
coming.
your
Thank
story.
you.
And thank you for letting us be here
It's all
today.
right.
We really
I
appreciate
hope the guys
it.
been looking after you.
Yeah, no,
Like
they've been
how it
amazing.
is.
Thank you. You've got a great team here.
Amazing.
We really
Thank you very
appreciate
much.
Thanks
it.
ever so much.
Brilliant.
All the best.
Cheers. We'll
Take
let you
care.
get back
Thanks,
to it.
mate.
Thanks, bud.
All the
Thank you
best.
very much. I
Look
love
at
that. That was
Brilliant.
absolutely brilliant. Genuine, authentic, and a really nice overview of where he started from to where he is now. So huge recommendations from us. We've all been
Everybody's
here.
got between the kind of different areas that they're
I
covering.
need to get here on a night now.
Yeah, well, I was thinking maybe we should come and have a little night out.
Definitely.
A podcast night out. What do you think?
Stand
Hannah, you
alone
down
from
for
there.
that?
Friday.
We're getting a nod from Hannah,
DJ.
so that sounds good. Yeah. Shall we move on to the topic of our
Yes.
podcast this
Yep.
week? Matt, do you want to tell us a little bit more about that?
Yeah, so with everything that's going on in the world at the minute, wanted to try and stay on that subject and how it's affecting our industry.
Yeah.
And mortgages is a massive topic. So we've got the main man, Rob Bird, on. Come on, Rob.
From HLC
Okay.
Mortgages.
He's just worked
Come on
out
over.
a new cup of tea system that Tim has at home.
Rob has been
Posh
introduced
tea.
today to posh tea,
Bougie
or
tea.
loose leaf tea, as everybody else knows it as, and putting the decanter on top of the cup has totally blown his mind.
Absolute revelation to me.
Nice,
Like people in my life.
nice to see you,
Like
Rob.
magic.
And thanks for coming on.
No problem. Well.
Yeah, as Matt said, I think it's really relevant at the minute, isn't it? Especially in our industry, but to understand what's going on with mortgage rates. And hopefully you can give us a little bit of clarity on what's happening at the minute.
Yeah.
I mean,
yeah.
before we go into a couple of questions that we've got, how do you see the market as a whole at the minute from an advisor's perspective in terms of your clients, how you feel it's going this year?
I mean, pre sort of February 28th, it was shaping up to be a pretty positive year, if I'm being honest. I think we were expecting probably another Bank of England rate decrease, which would have helped everybody in terms of the numbers and what have you. Obviously, with the events of the last sort of month and a half, that has taken a different turn in terms of rates. However, I'm in terms of what we do, we're still helping lots of people. It's different to what we thought maybe the outcomes were going to be in terms of rates, but still lots of people looking to either refinance, move.
A lot of different mentalities as well with
it. Yeah, absolutely. And the bit really is when you're giving advice based on what the client's preferences are and what their thoughts are on certain things. So different people have got different feelings about what might happen with this conflict, how long it might go on for. Which will then have an impact, obviously, on rates, either over short term or longer term, depending on your viewpoint, really.
And their individual futures.
What they're looking to do, absolutely.
Yeah.
I'm guessing per client is probably taking up a little bit more of your time at the moment in terms of questions and the concerns along the process. You would be. Yeah, and I think the other thing is probably delving into things that are like in the grey, I would say, in terms of outside of sort of just the sheer nuts and bolts of the numbers, just in terms of what's happening, what do you think will happen, and not everybody's sort of watching the news or listening to, the latest developments or anything like that. So it's difficult if you're coming in completely cold and going, well, I spoke to you 6 weeks ago and the rates were at one level and now they're at a different level. Just to give that sort of level of kind of overall education, I guess, is taking a little bit longer in meetings. From that point of view, and sometimes we're reassessing budgets as well. So that's another thing that again will elongate the conversation. Really.
It's interesting you touched on that though, because of the last podcast, Jade said, I don't really follow the news. I don't really keep up with it.
You're not on your own. Don't worry. You're not on your own. Loads. The majority of people, I would say, are not sort of following every sort of press conference that different people are giving and understanding the nuances of stuff that's being discussed. So, it's not, certainly not. You're probably the majority, I would say.
Yeah, which is exactly why.
I had the same feedback from the podcast, actually.
Doesn't surprise me at all.
I'm exactly the same.
There's a lot of scaremongering, isn't there, on the news? Let's be honest. As well.
There is.
Yeah,
no doubt about it.
Yeah, absolutely. And you're only seeing what I suppose there's an element of propaganda to a certain degree. You're seeing what they're replaying sort of things that Trump's saying, and maybe his style is to be braggadocious and over the top and say, right, we're going to do this, and you look and go, okay, actually what you said and what you did are two completely different things. And one day it was like, we're going to bomb, this, that, and the other. And the next day it was, we're at peace talks in a different country. So it's completely different to what's actually happening. To be fair. So a lot of stuff going on with that.
What factors impact or influence interest rates?
Okay, so there's
just a bit of insight.
There's two different types of interest rates. So you've got variable rates en masse, so that's things like trackers, discounted rates. And they literally are following the Bank of England rate. The Bank of England rate is in place to look after inflation, basically.
Sure.
So if inflation increases, the rate inevitably will either stay where it is or it'll go up. So that's that one bit. Obviously, the reverse is true as well.
Okay.
So if the inflation comes down, the rates
will come down as well.
Fixed rates are a little bit more complex. So in terms of fixed rates, banks and money housing lenders are borrowing their money from the market, basically the money markets. Those rates that they're then charged are then passed on to the consumer. So essentially things like gilt rates, which is government lending, employment figures, economic data. So when you hear when you hear about employment numbers, percentages wise, that kind of thing are all at play when it comes to those rates. Now, with the Bank of England rate, there's a meeting every 6 weeks to decide what's happening with the rate. With the money markets, those rates are live, so it's a day by day sort of basis in that sense. So those rates are a little bit more sensitive. So if you imagine, inflation is one of the big drivers for both of those rates. That's why you see a drift with the fixed rates downwards pre a Bank of England rate decision when it comes down. Because the data's already in place to drift it that way.
It's changing almost hourly, isn't it?
It's changing really regularly.
You'll find you'll lock in a deal and then a few hours later it's changed.
We get. I mean, as brokers, we get emails pretty much on a daily basis, and lenders are good. They try and give us sort of 24, 48 hours notice if they're changing their rate
to be able
particularly
to lock it
upwards. Particularly upwards. And there are some lenders that allow us to sort of lock in for a longer period of time if we know what we're kind of doing. But yeah, generally it's a pretty rapidly moving situation, particularly currently, because things are changing all the time.
At the moment, do you see a lot of people going towards the trackers or more so towards the fix for the certainty?
I mean, traditionally, I would think, when people come in and they talk about their biggest monthly outgoing, they typically want to know what that's going to be. Because you want to be able to budget effectively, don't you? So in a lot of cases, people were conditioned to look at, right, I'm going to fix my rate. I'm going to fix my rate for either 2 years or 5 years. We are having more conversations with people around tracker rates. Although, again, there are caveats with that. You have to have the conversation around the potential for, obviously, if inflation is infected, which let's have it right. If oil prices continue to rise, that's going to infect inflation in a negative way or positively, depending on which scale you're on, I guess. And that then will move the Bank of England rate. So for me, when we're having conversations about trackers, it's just understanding what you're signing up to. And equally, if you've got an exit plan in that sense for that as well. But still plenty of people talking about fixed rates as well. Just thinking what the rates are. I'll fix in for the period of time that I think is appropriate for my situation, and that might be 5 years if you've got young children and maybe they're going to school and your finances will free up a little bit. That might be 2 years if you're working towards promotion. Absolutely. Yeah. Everything is on a case by case basis, and it's what's right for the client in that particular circumstance.
It depends on the individual circumstances as well. There's lots of variables.
There isn't a one size fits all.
We're probably going to generalise in many respects today, aren't we? So okay, all right, that's interesting, Rob. Thanks.
And what do you think's the type of buyer that's been most affected by the changes? Would you say?
I mean, with the exception of people who are porting existing rates, which obviously are what they are, I think everybody is affected in terms of rate increases. The two groups that I would say are probably most exposed: people with smaller deposits, which are typically first-time buyers, because generally speaking, the rates will be higher anyway in that scenario, and then people that are making that sort of life purchase, that leap from one price bracket to another, where they're taking out additional funds, where they might have looked at their existing mortgage payment and gone, right, well, I'm paying X amount, I know I'm going up 20%, so that therefore it will be 20% more than what my existing rate is, and that's just not the case at the moment. So it obviously feels like a bigger jump than it inherently is.
Interesting.
Yeah, and I think that's where we've seen that middle part of the market in terms of families probably affected the most.
Yeah, I'd say that's fair.
Certainly my conversations, I think it's the people who are the nice to, I'd like to move, not that I need to move, that are the ones that
it's a want rather than a need, isn't it?
Yeah. I mean, if you've had an extra child, you need the room, or you're moving locations for jobs, you're still going to do that because there's a necessity there.
Exactly.
I think the people who are maybe looking at moving because they'd like a bigger garden, or they'd like an extra bedroom or a study or what have you, and maybe just holding fire a little bit at the moment.
Yeah, and seeing what happens, sitting tight.
Interesting you touched on the fact that people are changing what they're looking at in terms of money, because we had a scenario last week that someone was very interested in a 4-bed that we had. It was on at 475. A few days later, I spoke to them again, and they've said we've had to reassess what we can look up to, and they were looking up to 425.
Yeah,
so a 50 grand change.
I think if you've been on the market for a little while, looking for something perfect for yourself, and it's been a couple of months, I think touching base with your broker is the right thing to do, because what you don't want to have is a situation where you're making offers on properties and then you realise that actually, from a budget point of view, it's going to be difficult to make it work. So I think, again, another bit, when we talk about spending time with clients, that's something that's become more prevalent, is those kind of conversations, just to check in on where are the rates, where are they from what we talked about 6 or 8 weeks ago.
But I don't think, like people, we were talking before, people don't probably quite understand. If they go to their bank, like you said, they'll give them a rate, they'll lock them into that rate, but they won't have that journey with them to say, actually, I can get you a better rate now.
Won't be reassessed.
It won't be reassessed.
No, if you're going directly to a lender, they're not going to do that for you. The onus would be on you to kind of ring them and say, right, well, what are the rates today? And you obviously don't know when rates are changing. Necessarily, you've got other stuff going on, haven't you? If you're business and life in general.
I think it's a good point though, because if I cast my mind back to when I was younger, I banked with, I think it was Halifax at that point for a long, long time, and naturally, before I got into this, I thought, well, yeah, I'll go to Halifax. You're familiar with them. It's someone that you think, I've banked with them for 10 years. Yeah. But I can imagine a lot of people look at it the same way and think, I'll just go to them, not necessarily understanding that although you can do that and understand your figures from them, actually by going to a whole of market advisor, it opens up a totally different world and might save you in some cases quite a considerable sum of money.
Yeah, absolutely. I mean, that your experience there, I have clients now who when we're making a recommendation, and maybe it's a bank they don't know or they've not had any business with, that they'll think they have to open a current account to be with them. And I imagine the reverse is true. If you've got a current account, you think, I'll just use my, it's the path of least resistance, isn't it, if you've already got a relationship, to be fair. But yeah, I mean, we're a whole of market broker, so lenders, as much as we've just talked about the rates changing through market conditions, lenders will also have different appetites for business at different levels, and it's probably one of the only places where you see people might put their rates up to avoid taking extra business on where they're exposed to an amount of risk that they're comfortable with. So the rates can change just on that basis. And for a lender, if you're the cheapest deal in town, the easiest way for you to reduce your risk is to increase your rates. And sometimes that might be that 1 week we say a particular lender is the cheapest deal, and then 7 days later it's somebody else, just on the basis of that. Absolutely. Not on the basis of anything else.
And it's worth bearing in mind, isn't it, that different lenders have different criteria. So you might go to your bank and actually you can only borrow 200 grand. Yeah. But if they come to see you, their criteria might be looked upon more favourably elsewhere, and they can borrow 250 and buy their dream house. So you got to take that into consideration.
Absolutely.
As well.
Without getting too involved in terms of that process. But different lenders will use different multiples. Yeah. Different lenders will use different parts of income that you receive as well, and apply different proportions to that. Okay. Quite regularly, we run some software where it will show us what everybody will lend, and quite regularly there's gaps of sort of 30 to 50,000 between lenders that you would normally say.
It is, because that's a big spread. 30 to 50,000 is the difference between a 2-bed semi with no garage and a 3-bed semi with a garage in some of the areas that we operate. So,
and also equally, I guess it's interesting you say about budget. Quite often I have conversations with clients where they have a particular, they talk about what happens if I had to accept 5,000 less for my property or pay 5,000 more. Yeah. And the numbers on that equally are not what you think they were. In a lot of cases, sort of £5,000, and again, not having the numbers prepared, but you're possibly talking about 15 quid a month.
Okay. That's what I love about HLCs. You've got that personal touch and you can have those conversations.
It's a dialogue, isn't it? Which you wouldn't have elsewhere.
Can I ask the big question here? For most people probably want to know this. So,
when did you lose your hair?
It's been an ongoing process for a number of years. Turkey flight inboard.
Was that not the question?
That was definitely not.
I've jumped the gun there,
mate. So
it's all right, I'm used to it, don't you worry.
He gets it from me every day.
So revenge is a dish best served cold.
I've interrupted there. You carry on.
So average national house price, I'm right in saying, is about 268,000.
268, I think, yeah.
Okay, so if you are a first-time buyer with a 10% deposit, what were you going to be paying for that house prior to Trump starting this Middle East war to actually what it is present day?
Good question.
So with a 10% deposit, and over a 35-year term.
35-year, yeah.
At current rates, and this is a 2-year fixed rate, so they'd be slightly different for 5 years. There wouldn't be a lot of difference, though, to be honest. Okay. You'd be looking at a monthly payment of around £1,268. Now, that's over a 35-year term. Okay. And the rate would be around about 5.33.
And that's now?
That's now.
So 5.33 now.
So previously, it would have been 4.39.
Okay.
And you would have paid £1,125.
So difference.
So £143.
Okay, that's fairly significant.
So we're talking £1,600 a year, roughly?
Yeah, so you're talking 12% of your monthly payment, essentially. There or thereabouts, the increase. So
that's pretty significant.
So it's...
So if that stayed the same over the 35-year, which we know it wouldn't, but... For instance, we're going to be looking at roughly £55,000 more.
Essentially,
on that house.
If that uplift,
But
that's mad.
It is mad.
It's mad when you look at it like that.
Mad.
It is. What I find particularly interesting, bearing in mind that is based on the average national house price of 268. So obviously I'm from the Redditch office, we know that. So a lot of the properties that we deal with are probably under 350,000, 300, 350. Actually, I looked this morning, under 300 grand, we've sold 90 properties this year. And that's a really high percentage of what we've actually sold. So despite that, post all of these changes, actually that part of the market is still turning over properties. It absolutely, it's closer to 60%.
I think the key thing,
encouraging still, right?
As much as we, it is a negative, isn't it, that increases in interest rates
without a doubt
in terms of that.
You can't.
However, we're not in a position where we're at the worst they've been in the last 4 or 5 years. After Liz Truss's budget, they increased to amounts that were slightly beyond where we are now. From that point of view. So in terms of, I know you asked the question about who's sort of most affected by that. Depends on, if you're moving, it depends on when you organised your previous mortgage, because it could be that you're going from rates that were higher than that to rates that are lower than this, to be fair.
Yeah.
So from that perspective, there's lots of people that will be in that boat as well, because it's not that long ago that was the case, maybe 3-4 years.
Yeah, but that's interesting, because they could be exiting a fixed term right about now and going into a better scenario for them.
And I suppose first-time buyers, the rate that they would be paying for that property if it was on the rental market, if they've got their deposit, they're still probably going to be better off buying it.
Yes. It's one of the things that never
for them to know,
for sure,
never fails to amaze me, the price of rent.
Yeah,
to be fair, whenever I speak to landlords and stuff,
absolutely,
collecting the data about what they're letting their properties out at, I just think, wow, how on earth is that still the case? But so in terms of that, it's absolutely still, if you're buying that 268, I imagine average house, 3-bed semi, something like that,
absolutely,
you're probably going to be paying that or more than that in
I
rent.
think so.
I would say more.
1,400.
I was about to say 1,400 quid in Redditch for your average 3-bed semi with or without a garage is about where you'd be from a renting point of view. So actually, even though rates have gone up slightly, it's still, if you've got the deposit, more beneficial and cost effective to own it. And rates are a little higher than they were previously. So actually, amongst that little bit of negative news that rates have gone up, still relatively positive to see that people that we're engaging with are still buying at that level. And I don't know about you guys, I know your area is slightly different, but I've noticed that prices are holding really firm at around 300, 350. We're in some cases getting over the asking price. When you inflate up to 5, 6, 7, perhaps we're finding that vendors are staying on the market for a bit longer and having to be a little bit more flexible. Yeah. Would you echo that particularly at Bromsgrove?
Yeah, definitely. That part of the market is not an issue.
Yeah.
Personally, it's still that family 4 beds.
Yeah.
That is still where it's price sensitive.
Yeah.
And there's a lot of heavy negotiating going on.
For sure.
I can see that being the case for the rest of the year.
Yeah.
Personally.
Yeah. Well, I wouldn't disagree.
Obviously, base rate is likely to increase.
So not necessarily next month, but more likely to, because inflation. The inflationary figures that have been reported, I think I heard this morning, inflation tracking at 3.3. Now the target's 2%. Generally speaking, if we're within a percent of that, that's healthy. To be honest, so I think there'll be reticence to increase the interest rate, because of course it has other economic effects by doing that. Makes credit card bills, everything else becomes more expensive. So I don't think at the moment there's necessarily a suggestion that it will absolutely happen, but it does make it more likely.
But in terms of the fixed, have they already accounted that for?
Yeah, so with fixed rates, it's almost in real time, if you like. So anything that's happening economically will filter into that. And inflation's a big part of that. So you're not going to get a Bank of England base rate increase and then a sudden 0.25%, if it's 0.25%, 0.25% jump in your fixed rates. It will have happened already.
Already been built in.
Because the economic data has already been factored into the market.
That makes sense.
Yeah, from that perspective, you're not going to get that sort of rate jump shot, if you like, but you will see a drifting upwards.
Okay. I've got a question just based on that example that you gave. So I think that was based on a 10% deposit.
Yeah.
If somebody was in a fortunate position where, you know, they've got good equity in their house or they've got a larger deposit, have you got an example based on, say, 20%?
Funnily enough, I have.
How did I know?
So using the same criteria, so average house price, if you had a 20% deposit, the rate would then be around 5.09.
Okay.
Which would give you, so obviously we're borrowing less money, so the monthly figure is going to be less anyway.
Yes.
Going to give you a monthly payment of 1,094.
Okay.
It was 4.09, so
Okay.
4% below that.
Yeah.
And that would then give you a monthly payment of £960.
Okay.
So about £134
Yeah.
difference, which is proportionate in terms of the jump, really.
Yeah. Okay.
So you're not, you're not
So the
massively better off.
Yes, it's not making
you
it-
are.
it's
Yeah.
not making a massive
I
difference.
would have probably, maybe I'm naive to it, but I would have probably thought that it would have made a greater
of a
difference
difference.
there.
Yeah.
I realise it's based on loan to value,
Proportionate,
and
isn't it?
brackets and things.
To be,
but,
it's proportionate.
but it is
to
proportionate,
the
yeah,
range,
exactly.
So,
Yeah.
you know, and equally, the 20%, 10%, 20%, 25%. So
Yeah.
the rates jump around every 5%. Not necessarily for all lenders, but there will be a movement
As a-
every
as a
5%.
rule. Yeah, okay.
Yeah. The big sort of points where it changes are from 95% to 90. That's
Yeah.
the biggest change. And then at 75%, there's a drop, and then at 60.
Okay.
Most lenders, the 60% is the kind of floor. They don't go any lower below
Yeah.
that point. So what I'd equally say, just on deposits, and it's one worth looking at, that if you're, I don't know, at 76.2%, just in terms of running the numbers, something we would do normally anyway as brokers, but just running the numbers, if that might be, I don't know, £1,800 or something like that, you might be able to squeeze your budget a little bit.
Yeah.
But that drop down from 76 to 75 proportionately will make more of a difference, because all of the money will then get cheaper.
Yeah.
So it's always worth running
yeah.
different
Absolutely,
deposit
different scenarios.
just to see where you are with.
That's
with
really
that.
interesting to know, though, and understanding those thresholds, so 95% to
Yeah.
90, and then 75%, 60. That's definitely something I think your average person won't have any concept of.
No, I guess
at all.
you've got what people often think. I've got what I've got, and I want to put that amount of money in. I'm going to withhold this amount for decorating
And I think
or
that's
freshening
exactly
up.
the point. A lot of people
That's
that
the
I speak to say, yeah, but I want to decorate and put new carpets in, which I totally get. But really what you're saying is it might be more beneficial to say, take a couple of grand off that, put that towards your deposit, puts you into a different bracket from a loan to value point of view.
Yeah.
And actually, yes, you might not be able to have a new carpet in the lounge, but you're so much more better off per month. That's really interesting.
Yeah.
Okay.
Amazing. I found that really useful.
Knowledge
good.
is power.
Knowledge is power. Yeah,
Knowledge is
absolutely.
power.
Thanks for
Very
that,
powerful.
Rob.
man.
Thank you, Rob.
Rob, really appreciate that.
No problem.
Thank
You're
you for
welcome.
joining us.
No problem at all.
Appreciate it very much. Well, we'll let you get back to your
Thank
busy
you.
day, mate.
Lots to do. Thank you very much.
Thank
Good
you.
to see you,
Thanks,
bud.
Rob.
Cheers, Rob. I'm going to quickly go and get my little one because I can hear her. So you guys carry on.
Okay.
Oh, we've got another visitor.
Questions and answers, guys.
And then there were two.
And then with the return.
I enjoyed that.
I just think it's so good to get, an outsider's opinion. And again, like the brackets, like Rob was just saying, it's like, the same sort of kind of perspective that we give, on the brackets,
Yes.
on the online portals and pricing. So yeah, it's good. Good insight.
I think that's amazing. Well,
Really helpful.
one of the questions that I have here, I feel like we've already answered. It was basically from somebody who is a first-time buyer. They've been to see their bank and they asked the question, are all brokers whole of market? The answer is no, they're not whole of market. Rob's obviously just explained that. And we can understand the difference between, if you go to your bank, they'll offer you the best rate probably for your circumstances within that bank, but they won't necessarily be whole of market. I have, however, been slightly distracted because
Oh my
I can
God.
see something coming in this direction.
Back in 2 seconds.
Oh, okay. Well, that was
On and off.
fleeting, and we weren't prepared for.
Yeah, I based on that question from Joe Public, interesting because a lot of people from our branch, they're stuck with the same lenders.
Yeah.
I don't know whether it's out of loyalty or whether it's just, you know, being a little bit scared to, you know, see somebody else, but it's just so worth it.
Do you think it is loyalty? Because
I don't know.
I think when it comes to money and saving significant amounts of money,
Why would you not?
exactly, you know, I would sort of question, would most people be loyal in that scenario? I'm not necessarily sure that they would.
Do you know, like, the only way that I can think about it is I used to use the same insurer for the car.
She is.
Oh, stop.
We have been halted here. Come and
on.
join us.
The liking moment.
Arsene Wenger. That's not what it is.
How old?
5 days.
Wow. So our third special guest, this one can't talk.
No.
Yet.
Well, she does, but
Yeah.
Squawks.
yeah,
Well,
squawks.
Congratulations, Mr. Matthew Bennis.
New dad
Somebody
again.
is
Yeah.
beautiful.
Another squad member.
Yeah,
Beautiful.
absolutely. Squad goals.
Yeah.
Squad complete.
Squad complete.
Squad
I think.
complete.
Squad
yeah.
complete.
You done?
Okay.
Yeah, 2 of each.
Yeah.
Yeah.
Mate,
definitely.
that is absolutely unreal. So would
Look
you like
at
to
his
introduce
little
your little new
face.
arrival,
This is Olivia Iris Bennett.
who
And
is
she's a
5
ace.
days old?
She's amazing.
Yeah. And
Yeah.
how is Olivia fitting into the dynamic of your family already? You adapting
Oh.
okay?
Yeah, she's fine.
Good.
She's good. Yeah, she's good. The other 3 met her and
Yeah.
fallen in love with her as well.
Proud
Like me
of
and Louise.
siblings.
Yeah, definitely. So, yeah, it was a bit. Obviously, I went off Wednesday last week,
Yeah.
so it was a long few days because she was
Yeah.
in slow labour from Tuesday night all the way up to Saturday morning,
Wow.
and then obviously had to have a C-section.
It sounded a little bit
So
traumatic,
it
that, mate, to be
was.
fair.
it was, yeah.
But
yeah.
equally, like Louise took it in her stride from what you said to
Yeah,
me. So
she's doing great. She's
brilliant,
doing great.
mate. Well,
So I thought
that
I'd bring
is.
her on for the end of this.
Yeah, that's unreal.
So we've
Well,
got these questions and answers.
We've briefly
No.
gone through one of them that Rob's already answered.
Yeah.
Yeah. Have you got anything that you can think of off the top of your head? I'm just going to log in and find my next question. Bear with.
Well, interestingly enough, Rob's still here. Rob, pop on for a second because I've got a bit of a question. So, obviously, I'm on paternity leave at the minute, and Louise is on maternity leave.
Yeah.
And we made a big jump last year to house the squad.
Yeah.
And obviously, realistically, it will put a lot of pressure on us over the next 9 to 12 months. How easy is it from somebody similar in our position to be able to go to their lender and say, look, struggling to make payments for the next 2 or 3 months because of the maternity pay being so reduced?
Yeah.
How do they go about having that conversation? Is it likely that they can do something? I know they can do something in terms of going on to interest only.
Yeah.
But is there other options for people?
So different lenders will have different plans for that. The first thing I would say is it's always the right thing to do to sort your lender ahead of time to find that out. And they'll have different, as I say, different ideas of how to deal with that. Yeah. And different options. There'll be payment holidays potentially available. As you say, options to switch to interest only as well. But my big advice would be talk directly to your lender. Sort of as soon as you kind of know, and then work a plan between you. Because if you do find yourself in a situation where you are struggling to make your payments, they're obliged to be helpful in that scenario. What they don't want to be doing, what lenders don't want to do, is they don't want to be in a situation where they're having to repossess properties because people can't make their payments. They would rather work to a plan with somebody to ensure that they're in the
So
right
taking
place.
that a step further and going back to post-COVID when payment holidays started to sort of become a bit more prominent, is that something that can or would impact someone's credit rating then?
Again, so typically a payment holiday that's been agreed with the lender, no.
Okay.
But I would also clarify that with the lender at the time.
That's a good
because
question to ask.
Yeah, it is.
I'm taking this payment holiday because you've said I can.
Yeah.
Is that going to impact my credit rating?
Absolutely, because I have seen clients where, for exactly that situation, actually recently, where they did that with a loan and it did impact on their credit rating.
That's really interesting.
So I absolutely would clarify that with the lender at the point that you make the inquiry, really.
Good advice, mate. Brilliant. Okay.
Yeah.
Well, guys, I've just checked the time, and I think that probably wraps us up for today. Thank you again, Rob. I appreciate it.
Cheers, Rob.
No problem.
Star, mate.
I've enjoyed that. I think it's been really good to have, including Olivia, 3 special guests on our podcast. Just so everybody understands where we are next, we're going to be in Astwood Bank at a venue called Bank. Yeah. A lot of local people will know that. A really popular venue. So keep an eye out for that. But for now, thanks to Elle.
Yes.
Cofton at the Bridge. We really appreciate it. I'm going to get one of their flatbreads.
And me.
Don't know about you.
Definitely.
Unreal. Thanks guys.
Thanks.
See you again soon.